Hi guys, this is Mike again from ConnectCPA Chartered Accountants, your cloud accounting and technology specialist. This is part 2 of a 3-part video series on GST, HST. Today we're going to dive into greater depth on some of the most commonly asked questions we receive from our clients related to GST. Let's get started. One question we are commonly asked is, what goods and services should you charge GST on? Although you're required to charge GST on most goods and services, there are some goods and services that you should not. Some goods are classified as zero rated, which simply means you can claim ITC'S when you incur expenses related to these goods, but you're not supposed to charge GST to your customers. Some examples of zero rated goods include basic groceries, prescription drugs, and most medical devices. Exempt goods, on the other hand, are goods that you cannot claim ITC'S or charge customers GST. Some examples of exempt goods include music lessons, educational services, and daycare services. Next, I want to discuss one of the most frequently asked questions by our clients that has caused much confusion to many business owners. That question is, how do you treat the sale of goods or services outside of your business's home province? Although the rules related to this topic can be quite complex, the general rule that will apply in the vast majority of situations is that you charge GST based on the place of supply of the good or service. Now, the place of supply is usually determined by the address of the customer you are transacting with, and also where the work is actually performed. So here's a simple example to illustrate how this would work. Let's say you operate a business in Ontario and you want to provide consulting services to a business in Nova Scotia. In this example, you're completing your work from your home province and you're not actually traveling to the customer's place of business in Nova Scotia. You would charge your customer the Nova Scotia HST rate, which is a harmonized rate of 15%. Now, the exact same rules would apply if you were, say, shipping a product from your home province in Nova Scotia instead of providing a service like in the previous example. It's important to note that we have to make a distinction between provinces that have a harmonized tax, like the one in the previous example, which simply means that you have one tax rate comprised of both GST and PST, versus a province that has a separate GST and PST component. The reason why this is important is because when a province has a harmonized tax, like they did in that previous example related to Nova Scotia, you charge only the HST at the province's sales tax rate. However, when the province has a separate GST and PST component, such as in BC or Quebec, you would just charge the GST portion. I'm going to provide a link at the end of this video where you can find all the current sales tax rates for each province, as well as details about which ones are harmonized and which ones have a separate PST and GST component. That's it for today. I want to thank you for watching the video. Stay tuned for the final video of this series, where we will demonstrate how to properly set up sales tax rates in various cloud accounting platforms. If you're currently one of those people tracking your sales figures in an Excel schedule, you're going to want to tune in to see the benefits of adopting a cloud accounting platform to aid in this process. And as always, if you're interested in more great tax, cloud accounting, and small business tips, please subscribe to our channel. Take care.